네, 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 오늘 또 미국 시카고에서 재무 컨설턴트로 계신 버니 씨와 연결을 해서 다양한 이야기들을 좀 들어볼 텐데 앞서 간밤에 뉴욕 증시 같은 경우는 3대 지수가 모두 하락하면서 마감이 됐다고 전해드렸습니다. 시장 바닥론에 힘이 실리면서 매수를 하는 움직임들이 포착이 되고 있는 상황인데요. 그렇다면 현재 시장에서 주도주 섹터로 올라설 만한 성장 관련된 종목들은 어떤 종목들이 있는지 많은 분들이 궁금해하실 것 같습니다. 오늘은 매수하시는 종목 중 앞으로 좀 눈여겨볼 만한 섹터군들에 대해서 이야기를 해주신다고 하는데요. 오늘 준비하신 내용 지금 바로 만나보시죠.
I thought we'd look now at some individual stocks and see how they compare to the overall market. So we know the market is in a declining phase, no doubt about that. We know that we're being led down by the three growth sectors of the market: communication services, technology, and consumer discretionary. But let's look at some of the individual stocks because I think some things are starting to change currently that haven't existed prior to the last couple of weeks. We're starting to see some people that are actively starting to buy individual stocks on significant weakness in that consumer discretionary space. So the first chart that I wanted to take a look at here basically is looking at the CRB and comparing that to the consumer discretionary sector of the market relative to the overall S&P sector. So relative to the overall market. And what I did is I took the last 20 years of the consumer commodity price index, and we can see that we've had rallies and declines. And what we see is when we rally in the CRB, the commodity price index, we have an underperformance on consumer discretionary relative to the S&P. So that's not leading, that's lagging, and that's underperforming the markets. We had a big rally here, another decline here. Now this time we had a rally, and we also had a rally in that space. But then we had a prolonged period between 2010 and last year where the commodity price index kept working lower and lower and lower, and consumer discretionary continued to outperform the S&P. Since the end of last year, we've had this reversal where the commodity prices, particularly energy prices, have gone up radically, and consumer discretionary has rolled over and is starting to work lower. Okay, here's one stock that's a consumer discretionary stock that we want to take a look at, and that is Dick's Sporting Goods. So it's a lifestyle kind of a company where you can go in and buy sporting good apparel, that sort of thing. And what we can see is that that stock was basically on a mission to go lower, and this is that big decline that we saw going off of the March lows and making new lows down here. We had an earnings release, huge volume. The market opened significantly lower on the day, maybe 15-20% lower. And if we want to put that in context, let's look at long term, okay, and we can see now how substantial that move down. This is a weekly chart. How substantial that move down was and the bounce back in it. And here's that peak in volume. Almost the most volume we've had in the last 20 years. So you don't see this kind of volume and this kind of reversal unless there's buying at attractive prices. So there's people that said, hey, this stock is great. It's down from $130 down to $65. I'm willing to start to add to positions down here. Let's look at another stock down here, Williams-Sonoma. Williams-Sonoma is a high-end kitchen appliance store that sells really high-end fabrics, all the other discretionary things, plates, bowls, expensive silverware, that sort of thing. And what we can see is that stock also had a significant decline, much lower than the March lows, and the S&P really hasn't taken out the lows, even with the price declines in the last couple of weeks. Big volume again on a gap, not a gap open lower, but an open lower after earnings. And we can see that volume is as big as we've had in the last couple of years also, and rallied right off after that low. So two different stocks, bad earnings reports, aggressive buying at attractive prices. Costco. We had Target come out with their earnings a couple of weeks ago, and they said, oh boy, earnings are bad. We're seeing slowdown in growth. Target, Costco, all these kind of people, when they have problems and they can't sell product, there's no problem for them because they just discount prices down to a level that moves the product. That's one thing that Target and Costco can do, is they can get rid of their supplies by knocking them down 30, 40%, putting things on sale and that sort of thing. It's terrible for earnings because they don't make any money, but they relieve their inventory problems. And that is going on right now. And Target did announce this week that they're going to offer significant discounts to move their product. But let's just look at Costco, okay? Another huge volume time, big gap open, big sell-off, and then the stock fights back hard. So that stock is down basically 30% from their peaks, and we're now seeing big volume coming in, and this goes back over time. That's a fairly significant volume day, biggest we had in the last couple years. People coming in again to buy attractive prices at discounted values. Another stock, okay, so if we think about what's going on now, we have really high crude oil prices. It's exacerbated by the Russia-Ukraine problem. What we also have in the United States is a refinery capacity problem. The refining capacity of these oil companies to be able to turn crude oil into natural gas has gotten less and less over the last 8 years, and we've talked about that before, because it's been unprofitable for them to refine at lower and lower gas prices. And we had pretty low gas prices 2 years ago. Now we have higher gas prices. Well, what we're having is a complete refining capacity problem to be able to refine that thing. Because we've shut down old refineries, we're running at about 99% of capacity, and you can't run at that rate all year. You'll break the refinery down. So they go into downtime for repairs and maintenance and all that. The more refineries that go into downtime, the more stress you put on the system, so the higher gasoline prices are going to go in the United States. Gasoline prices, high gasoline prices in a recession should say that this is going to be a problem for shipping. We're going to ship less and less goods because it's too expensive to ship. Well, if we look at J.B. Hunt, which is one of the biggest trucking companies, if not the biggest trucking company in the United States, they should be significantly impacted by this higher gasoline prices. And what we can see is, yes, as we started to go down, okay, and oil prices, particularly the Russia problem, came around, where Russia-Ukraine came around, that stock really went down significantly. But we're starting down here to see an accumulation, even with higher gas prices. We're seeing accumulation of the stock, and the stock is not going down. It's not making new lows. That sounds odd, considering what we have is much, much higher gas prices than what we had even 4 months ago. So finally, what we also want to think about is, okay, so we have all these different particular stocks that are basically starting to gain strength on weakness, but we need the overall market to be able to help us out. If we just look at the VIX index, what we can see right here is that we've been at a critical level, say, where above this is significantly negative for the market in terms of VIX, and below this is a market that's either complacent or in a bull market where the VIX is much less. And we seem to have a pivot of 24 on the VIX. And now we got down to 24, then we had the CPI report on Friday, so we're up here right around 28 right now. We would like the overall market, to start to get this and work below 24. I don't know if that's going to happen. I don't know when it's going to happen. But that also tells me overall market-wise whether the stock should have continued follow-through or not. If we were in a really substantial opportunity, buying opportunity, that VIX would be hanging up here around 34, 35, 36. We're not there yet. So another reason just to start to continue to, we're monitoring prices, we're monitoring stock prices that are attractive, we're seeing buyers come in. They're not big enough to be able to turn the whole market, but they're people coming in to buy. Remember that we also put out that piece that talked about Warren Buffett and how he bought 40-some billion worth of his 53 billion of stock purchases in the first quarter of this year. He bought them all within a 10-day window when the market was at the lows.